Okay, welcome. Um, this is Charts with Max, and in this video, I'm starting a series of video because I actually want to give a detailed explanation on some things. Um, at least, basically, right? There are different type of concepts in this market, and as a trader, it's especially as an analyst, it's very very important that you are familiar with some of them, especially the ones that are you know considered to be very very profitable and gives traders an edge in the market. Some of these concepts are smart money concepts, um, support and resistance, the supply and demand, the market structure, the market business model, and stuff like that. So, as a trader, before you can start going into the market and start taking a trade, or before you start considering yourself to be a profitable trader, you need to understand one or some of these concepts in order for you to be profitable as a trader. So, what the aim or what I'm planning to do in this series of lecture is to expose you to the precise and appropriate um, teaching. Okay, now I know there are thousands and lots of videos, PDFs, a lot of things out there online that you have watched, that you have acquitted yourself with, and you've been using. Some of you have been profitable using these things, and some of you have not been profitable. But either way, sometimes the way most of these things are taught is not really that they are taught wrong, but the way they are being taught is there is a lopsidedness in the way the knowledge is being passed. Okay, so when somebody's explaining support to you, he doesn't really tell you the reason why that level is support. He just let you know, okay, the name for this thing is support, and then you expect you to go to the trade and to the chart and look for it and you know try to frame something out of what is you've been taught. But for traders, right, for traders who are, I mean, veteran traders, we know that support is not just support because of the name. Support becomes support because of the function. Okay, so these are the things that I actually plan, or the goal of this master class is to expose you and to treat you and to teach you into the real, adequate, and correct knowledge about support and resistance, about different concepts, not just support and resistance, okay? Because I am planning on teaching different concepts, but for the sake of those who are the beginners among us, I'm going to start from scratch. I'm not going to be explaining forex, what is forex and stuff like that, but I'm going to start from scratch so that in fact, if you are just starting up as a trader, you won't need to pay someone for mentorship or whatever before you can start trading, or before you can get adequate knowledge. Okay, so um without further ado, let's just get started. Now, the first thing you need to know is that there are three types of analysis. Okay, in this forex market there are three types of analysis, and these types of analysis is dependent on choice. Okay, so you as a trader, you have your choice of analysis. Okay, so um, I'm going to call this one the first analysis, the first type of analysis, which is um, technical analysis. I just want to make this bold so that you can see it. Okay. Okay, so that this is the first type of analysis, is the technical analysis, and don't worry, I'm going to explain everything to you. Okay, the difference, the similarity, how they work together, and how you as a trader can engage them. Okay, the second type of analysis is the fundamental analysis, and the last type of analysis is the sentimental analysis. Sentiment analysis. Now, each of these style of analysis are unique in their own way. Technical analysis is not fundamental analysis. It does not in any way have functions that the technical analysis have. Same things, the sentimental analysis is not fundamental, neither is it not technical. It's each of this style of analysis are different in their approach. Okay, the way we approach them as trader, it's different from each other. Okay, so we as trader, we try to understand this, which is the technical analysis. We try to understand fundamental analysis, and we try to understand sentimental analysis. And at the end of the day, we try to bring out we try to understand differences and the similarities. Okay, so in this video, I'm actually going to be explaining everything to you so you can understand, because most people don't even know what technical analysis is. They don't even know what fundamental or sentimental is. Okay, now the most popular style of analysis is actually technical analysis, followed by fundamental, and then the sentimental. Okay, so majority, at least 80% of traders, 80 to 90% of traders trades technical. Okay, they prefer the technical, and few percentage trades fundamental, and very 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 low percentage trade sentimental. Now, you can trade technical, and you can also trade fundamental, and you can trade sentimental. You can be good in three of them, just depending on how deep you want your you know analysis knowledge to be. Personally, I trade technical, fundamental, and sentimental. I even and When it comes to the crypto aspect, I am also very versatile in on-chain analysis. But for the sake of this teaching, we'll be focusing on technical analysis. Okay, now technical analysis is a style of trading that focus on price only. Okay, the fundamental analysis is the type of analysis that focus on news only. Only. Okay, the only should be in capital letter, only. And the sentimental analysis is the style of analysis that focus on public opinion only. What that means is that, now, what I just gave here now means that sorry, let me just correct this. Now, technical analysis focus on what is happening in price. And by price, I mean chart. And I'm going to be explaining what chart is. Fundamental analysis focuses on news. Okay, so when you hear the news that the US dollar is weak, okay, that's not technical analysis, that's fundamental analysis. And when the US dollar is weak, it means that USD will fall and foreign currency will rise. And then sentimental analysis is when there is, people are, there is FUD, that is fear, uncertainty, and I forgot what the D is now. Okay, I think depression or something. So when there's food, there's fear in the market, or probably there is hype in the market. You get so mo- speculators, when larger portion of speculators is on one side of the market than the other side. Okay, so when it's an analysis that is based on sentiment. Okay, So the larger portion of, speculators might be looking to buy the euro USD. Okay, and because of that, let's say out of 100%, we have 90% speculators who are willing to buy GBP USD. Okay, so that's the law. Sentimental analysis is actually where the law of supply and demand stays strong. Okay, now let's proceed. Like I said, um for this lecture, I'm actually not going to be talking about fundamental and sentimental. This is our focus because this alone is a very wide topic. Probably in coming series, I'll be talking about both of them or more, but for now, let's just focus on this, right? Now, I'm going to add another box here. Technical analysis is split, okay, into two parts. Now, this is where most traders or some people get it wrong. They get it wrong. And I'm going to correct that right now. Okay, so we have this here. Okay, just hope that is good. Hope I'm good with that. Okay, so let's proceed. Now, technical analysis, which is a style of analysis, why? Analysis is the way you analyze the market and try to know if you should be buying or selling when it is time to buy or selling, knowing what the market wants to do, what the forex market wants to do, right? Um, and when you know this, then you can know how to be positioned in the market, right? So technical analysis is split into two, and this is what some people don't tell you. Okay, the first part of technical analysis is the indicator trading. Yeah, indicators. And the second part of technical analysis is called price action. Now, for the sake of just let me just make it bold a little bit so everyone will see it. Okay, so I think that's okay. Okay, so technical analysis is split into two. Okay, like it's this is technical analysis is a style of trading, is a style of analysis, right? And it is categorized into two: indicators trading and price action trading. Now, indicator trading deals with you putting on objects, and this object indicates, right? That's why we call them indicators. These objects, they could be in form of lines, in dots, shapes, patterns, different things, different forms on your charts. And with the understanding of these indicators, you will know what to do in the market. Like they indicate what price is doing, or what price has done, or what price is about to do. Okay, so indicators can let you know what price has done, what price is doing, and what price might, or what price is about to do. Okay, so indicators in itself is a style of technical analysis. And we have lots of traders who just focus on indicators trading and they are doing pretty well. The same thing now the second style of technical analysis is price action trading. Now, price action trading deals with traders coming onto the chart and using simple charts information. They do not bring in indicators, they do not bring in any other thing. Okay, simple price action. Okay, that's the you can see the words alone defined what is being done on this category of technical analysis. Indicators indicate, and price action talks about the action of price. Okay, what price is doing. So I think that is well explained. Now, under now I'm going to, just for the sake of just making sure that everybody gets this. Okay, so indicators trading actually have um different types of indicators. This is where we now have different types of indicators, like I'm just going to make this um very easy to, I don't want to complicate the diagram. Okay, so we have the moving average. That's where we have the moving averages. We have the what else do we have? We have Bollinger Bands. We have the parabolic SAS. We have the what else do we have there? Yeah, we have the MACD. That's the moving average convergence divergence. That is MACD. And we have the envelope. Yeah, moving average envelopes, and so on. I mean, we have the stochastic. Okay, stochastic. We have the relative strength index. We have the average daily, the ADX, and we have the ADX. We have volumes. We have the alligator. We have thousands, lots, hundreds of you know indicators. Okay, so indicators actually are, they are very much, there are many. Okay, so there are a lot of them. There are a lot of them. Some are custom made, some are you know based on, I'm going to be explaining them anyway. So actually, now, what does an indicator do? Now I've explained. I defined indicators as object or stuff on your chart that indicate what price do, right? That's the definition, and of course it also has the function. But how does this function play out? This is how it is done. The indicators uses complex, or for me it's complex actually. So it uses complex mathematical calculations, and then put it into price. you know there are, I don't know, I'm not really not a math geek. Just what you should just know about indicators is that it is calculation based. Okay, it is based on mathematical expressions. Okay, so what moving average does is that it takes um, days. Okay, it takes the information of every day, depending on the input that you give to it. It takes this information, then divide it by other things, and then gives you the information. And with this information, you can be able to understand what might happen in price. But you won't need to be doing those maths calculation actually. And since it's an indicator, it would have done everything for you. All you need to do is just be able to read it and engage it. That's the point. So I'm going to be explaining some of these indicators, right? And I think that's the first thing I should do before moving on to um, price action. But for because of the fact that this video is an introductory video, right? Just to let, for the sake of beginners, I don't want to rush it. I just want to take it one after the other, step by step. I want everybody to flow along, okay, so that at the end of the day we all are adequately um knowledgeable about what we are doing. Okay, so you don't just go to the chat and start displaying your ignorance. Okay, now I think that's all about indicators. Okay, it's as simple as that. Technical analysis is a style of analysis, right? A way to analyze the market, and it is divided into two categories: the indicators and the price actions, and the price action. Now, and price action rather, not the price action. So the indicators is divided into different types of indicator. We have moving average, Bollinger, parabolic, MACD, envelope, stochastic, etc., etc. There are hundreds of it. Okay, these are just the ones I listed here. Now I did a mistake, and I'm going to correct that right now. Okay, I'm going to correct that mistake right now. Apologies for that. I'm a human, so it just makes sense that a mistake, and actually it's not really a mistake, it's just something that you don't really get out there. Now, the indicator doesn't just isn't just moving average. Indicators are divided into two types. Okay, now this is where things are going to get a little bit, you know, fun. Indicators are divided into two parts, just like technical analysis. Now we have, I'm just going to clone this so that I'm just going to put that here. Okay, I don't want to complicate this diagram. Okay, so that's why I'm trying my best to make sure the drawing is as easy as possible. Okay, so I think this should do. Okay. Okay, so indicators are divided into two. We have the leading indicators and the lagging indicators. The leading indicators and the lagging indicators. Okay, so indicators are divided into two types. An indicator can either be a leading indicator or a lagging indicator. Now, all these things that I listed here, they are indicators, right? But if I am going to separate them, right, that means put them into their subcategories, it means I'll have to be removing some here, and then I'll be putting them here in their respective subcategories. Because a leading indicator, now let me explain what leading and lagging means. A leading indicator is an indicator that tells you what price is doing right now. And with knowing what price is doing right now, remember the definition of indicator is that, object on your chart that indicate what has happened, what is happening, or what is to happen in price, right? Or when you know what has happened and what is happening, you can anticipate what will happen in price. You get what I'm trying to say. Now, a part of that definition is true he, in this leading indicators subcategory, in the sense that leading indicators are indicators that leads. Okay, they tell you what is happening right now in the market. They don't give you past data information, they give you present data information. Okay, and with the help of this present data information, you can know what is to happen in price. It's as simple as that. Now, lagging indicator on the other and indicators that tell you what has happened in price. Okay, they let you know, okay, price has done so thing, and with that you can be able to anticipate what might happen in price. Okay, the goal of traders or analysis is to know what will happen so that we can position ourselves to be buying or to be selling, right? So leading indicators are indicators that tell you what is happening right now, and when you understand what is happening right now, and by reading what they are telling you, they can tell you, okay, what is happening right now. An indicator might, for example, one of the leading indicators is the stochastic. So a stochastic might be telling you that price is currently overbought and you should be considering selling. One popular lagging indicator is the moving average. Okay, another one is the zigzag, but the popular one is the moving average. And a moving average measures days past days data, okay, and then gives you, and then translate it to you in form of lines. Okay, so when it gives you these lines will either be telling you that, okay, with what has happened in price, okay, this is what has happened in price. That's just what moving average is telling you. It's just moving average is not leading. So a moving average will always tell you what has happened. So if price is already buying, right, a moving average will be telling you that price is in a buying condition, probably few hours later. Okay, so we want to know the difference. Please make sure you know the difference. My apologies for the mistake, and I'm going to correct that right now. So a leading indicator tells you what is happening right now. For example, the stochastic, the RSI, the ADX, volume, MACD, etc., etc. While the lagging indicators, like the moving average, the parabolic SARS, the envelopes, the Bollinger Bands, they tell you what has happened in price, and with that you can know what might want to happen. So I'm just going to it doesn't really, there's really no difference, okay, because I really don't want to separate them, because if I separate them now, it means I'll have to list all of them, okay. But for the sake of your understanding, right, moving average, Bollinger Bands, parabolic, all these things I've mentioned here are just little out of you know all the indicators that exist. Okay, so I would have loved to separate these, but I'm actually okay. Let me separate them so that you won't be confused. For those of us who are very so I'm going to be removing the stochastic, because the stoch. Okay, let me just leave the stochastic, because the stochastic is a leading indicator. The next type of leading indicator is the RSI, and the MACD is not a leading indicator, so I'm going to remove that. The parabolic is not a leading indicator, so I'm also going to remove that. I think all these ones here are not leading indicators, so I'm just going to remove them. Other types of leading indicators are the average ADX, average daily. It's been long I did use indicators, so I don't really know the name, but as we proceed, you'll be seeing them, okay. Then we have the alligator volume. Yeah, there's one called the alligator volume. I'm just going to use V there as volume. There is also one known as the Williams. Yeah, you can't really remember them, but just do your research on that, okay. It's been very long I used indicators on my chart, and I don't really use most of them, but this is a knowledge I already possess, so giving it out to you here. Now let's proceed. So that's it for leading indicators. So as for lagging indicators, there are lots of them, like the moving averages. Then we have the Bollinger Bands. Then we have the MACD. MACD actually have it's actually MACD is actually a controversial kind of indicators, because it uses um, volume, and which is a leading indicator, and it uses the moving average, which is a lagging indicator. So MACD, I'm just going to add MACD here also to the leading indicator, because actually MACD also should, it actually uses both, okay. So I'm just going to add it to both sides. So there are more, okay. Just do your research. This is where you have to do your assignments. I can't teach you I can't I have taught you everything, but I can't list everything. I mean, if I'm going to list everything, we'll have to be considering doing a video for hours, okay. So this is all you need to know about indicators. This is all everything I've explained so far. Go through it, study them, practice and go through it. Then in our coming classes I'll be explaining how to use indicators, but this is an explanation or expository video, so that you can brace yourself for what is to come. Now that's it about the indicators. Technical analysis is a style of analysis, and it is categorized into two: the indicators and price action. So indicators are objects, patterns, stuff on your chart that indicates what price has done, what price is doing, so that you can use that to frame a setup for what price would want to do. Okay? Now, these indicators is subdivided into two categories: the leading and the lagging indicators. So an indicator can either be leading or lagging. And types of leading indicators are, um, um, you know, types of leading indicators are alligator's volume, ADX, RSI, MACD, stochastic, and types of, lagging indicators are moving averages, Bollinger Bands, MACD, etc., etc. So, like I said, there are lots of them. There are lots of indicators. So you have to, do your research, practice, gain the experience, and then you can formulate a theory on which one is proper or which one is most convenient for you. Okay. Now let's proceed. So, for the sake of, just to make room for this teaching, I'm going to expand this. Um, we have, okay, let me just make this like this so that we all can get it. Okay, good. Now, let's move on to price action. Okay, let's move on to price action. Um, Price action is okay. I'm going to be explaining price action in the next video. I'm trying to make sure these videos are not, they are not long, and they are very well understandable and very well assimilated, so that you can assimilate them easily as a trader. You don't rush. Okay, and since we are not in a hurry, it's okay for us to understanding this first, work on them before we move to this one. Okay, so I'm going to be explaining price action, and okay, so price action is a style of analysis, like I said, that uses what has happened on the price in form of charts. Now, this is where um, things will start getting interesting. Price action uses charts. Charts, as in, let me spell that out for us. So, price action uses charts. Whatsoever is on the chart, that is what price action use. Anything outside the chart is not price action. Okay, whoever tells you whatever, there are some things outside the chart and it's price action, that's wrong. Price action uses the chart. Okay, so every single information that is printed on what on the chart is what price action uses. Now, what is a chart? A chart is a visual representation of what is happening on the market. And this is where I'll have to, move in to the next video, so that I can explain the three types of charts that we have, how to engage them, how to understand them, the differences, and, what's, of course, price action doesn't just end at charts. Okay, there are conceptualization that surrounds charts, and frame different scenarios based on price action for traders engagement. Okay, so in the next video I'll be explaining that. I think that's all.